Global share markets have fallen once again over the past 24 hours, and this does mark the start of the fourth week in a row of falls for global shares. It was hoped that the bailout package for Ireland would ease some of the concerns from investors for the European debt situation. However, it now seems that investors are now targeting some of the other more weak countries over in Europe, particularly Portugal and Spain. This will be a concern to European finance ministers. Despite this, US retail sales had a pretty strong weekend over Thanksgiving. This is thought to be the best weekend for quite a while, and this should help to boost the US economy in time. The soft global markets over the past 24 hours has seen the New Zealand dollar fall further. We are now trading under 75 cents against the US, and on Tuesday morning we are actually trading at 74.5. We're also trading under 48 against the Great British Pound. This comes despite some pretty good data for the local New Zealand economy coming out on Monday. First off the cab rank was the trade surplus, which came out much better than most were anticipating. This comes off the back of some pretty strong dairy exports, particularly high prices, but also more product leaving our shores. Business confidence also came out much better than most were anticipating, with local businesses now expecting their own outlook to improve over the short to medium term. This means we should see some further impetus for the employment situation, as well as more plants going in and some further expansion occurring. This should help provide some further incentive for the New Zealand economy to grow out of this recession. Overseas prices for lamb continue to look very, very strong, with UK prices recently hitting record highs. However, there is some talk that we may see some buyer resistance for higher prices down the track. It doesn't help that the Australians have been exporting a little bit more product recently, and they have almost filled their EU export quota. The outlook for international prices does continue to look very strong, and we are positive about the outlook for New Zealand prices for the coming season. We are predicting that there will be fewer lambs available for supply this year, and this should help to underpin schedule prices. We continue to predict that schedules will average more than 15% higher than last year levels.